Owning a home. It's one of the things most Americans strive for, and most eventually find their way to doing it. And in doing so, there's some big tax benefits that you should be aware of if you're going to buy real estate or if you already own it. Now keep in mind, I'm a licensed real estate professional. I'm not a CPA, I'm not an accountant. This is not intended to give legal or tax advice, mainly the tax advice part. What it is intended to do is make you aware of some big tax savings benefits if you own a home. So that's what this video is all about. Let's jump right into it. The first big benefit is you're able to deduct any property taxes from your income. Now, as of 2018, that is capped at $10,000 for SALT, state and local taxes. Next, moving expenses. If you've moved more than 50 miles for a new job or business, you may be able to deduct the costs associated with moving. So that's going to include any of your temporary lodging or any of the moving your items from one place to another while you look for your new permanent residence. The big one, capital gains. Any home that has been your primary residence for at least 2 of the last 5 years is eligible to pay less in the way of capital gains. $250,000 is free on the first $250,000 if you're single, and $500,000 is free in terms of capital gains if you are married. Keep in mind this exclusion can only be used once every 2 years. Next, home business expenses. This is for all my self-employed and work from home type people. If you have an office that you use in your house regularly and just for business, you can deduct expenses related to working from home from your tax bill. Now, there are 2 ways that you can deduct home business expenses. One, you can itemize and just knock them all off whatever you buy. The other is you can use whatever percentage of your house your office makes up and take that off your taxes in terms of business expenses. Lastly, mortgage interest. Homeowners can typically deduct the interest that they pay on their mortgage for their primary or any secondary house. And that is going to be a big thing, especially early on in the life of the loan when the interest portion makes up a much higher percentage of the loan than the principal payment does. Remember, I'm not a CPA, I'm not an accountant. I'm a guy that sits in front of a camera and makes weekly amazing videos on real estate that you should subscribe to if you haven't already. So for any actual legal questions, tax questions, that's not what I do. Reach out to the people that you need there. But what you should do is keep on coming back. Keep calling me for all of your real estate needs. We've been here for years and we'll be here for years to come. So until then, we'll see you soon. Cheers.